notoriously a little bit more conservative until he can prove that this thing's going to make money. And he's probably waiting. I mean, to his credit, he's concerned that it could lead to more financial scams, which the internet is obviously a gateway to.
Where's he been the last 20 years?
Yeah. But as soon as something starts to prove concept, like Apple did, he'll start to, I mean, his portfolio could change a little bit. I mean, it doesn't have long to do it.
Have a look. This is why I say about Buffett. You've got to look at what he buys and when he buys it. Now, he bought Apple in 2014, and what he realised then, and this is what my argument about why he buys energy and utilities and low volatility, right? Because what he's buying is he basically buys infrastructure, right? Banks, financial infrastructure, energy infrastructure, right? So he buys all of these things that have low volatility, but what we were talking about up the road, Tom, they're all going to survive, right? And Buffett says, I don't want any risk, right? Well, the only way to avoid any risk is to be 99 to 100% sure that the company you're investing in is going to survive. And at the moment, AI is really fascinating, but who ends up with it? Well, why would you invest now from a Buffett perspective of saying, our favourite holding period is forever? Okay, well, let's say it's 40 years. You have to wait for the dust to settle, and that's what we teach in the capital cycle theory, right? Let them all sort each other out, and they'll all kill each other. There'll be two left standing. They're the two you invest in, right? Because they're the two who have now got a competitive advantage in the marketplace.
Yep.
Right? And that's when he bought Apple. He looked at it and said, okay, it's been around for 40 years. It was a shit of an investment for the first 30. Now it's good. Has it got the App Store, all of those things now that make it a winning company? Now I'll buy it. But clever old Warren, if you go back and look at 2014, if you look at the Well 2 strategy, what was one of the lowest sectors? Information.
IT, yeah.
IT, right? And what does he do? He buys the best company, right? So he buys the best company in an industry that's at the bottom, and he did it with Occidental Petroleum, right? Remember when we said, get into oil? Buffett got into oil when the whole sector's cheap, right? It's really quite simple. But everybody's intent on picking growth, right? Oh, I got to find the latest AI. No, dude, you got to find the one where there's a mispricing.
Yeah, you just need to find the best company in a undervalued sector.
Well, in my mind, with the AI thing, I mean, there's three companies that'll be using a lot of it: Apple, Google, and Microsoft. And that's the technology's there, but the conduit to the market is through these pre-existing massive companies. So that's he could be not buying NVIDIA, for example, but buying Google, because their AI thing is already pre-established. They know that the company's not going to go anywhere. So that could be a way for AI to contribute moving forward.
Like everyone's trying to use AI. Like every industry.
Not everyone.
Yeah,
Dung.
Yeah.
Except old people over 60.
Yeah.
Hey, what?
What's Google?
What's this stupid computer writing this shit by itself for?
All right, what's on Monday?
Property.
Again.
Well, no, I just wanted to point out there that when a lot of times when markets, whether it's stocks and stuff, go boom, you tend to think it's a unique characteristic to that market. And what I'm trying to get across to people in terms of property is that the way the global economy and the money flows, most of the money flows into America, England, Canada, Australia, and New Zealand, because we're the ones who will take the money.